Sup guys, Christos here. Now, as you may know, Corsair Gaming yesterday released their Q3 earnings for 2021, and in this video I wanted to go through those earnings with you, give you my thoughts on those earnings and my thoughts on where I think this company is actually going to be heading for the rest of 2021 and beyond. All I ever ask from you guys is that if you do like these kind of videos, then do make sure you hit that like button and make sure you are subscribed down below. But having said that, let's jump into it. All right, so let's actually kick things off by going into the actual numbers on what was actually released yesterday. And if you're an investor into Corsair like myself, you probably didn't really have that many high hopes, simply because the CEO came out around 2 or 3 weeks ago and actually pre-announced these results. So our expectations probably wasn't that high, and these numbers kind of prove that. Just kicking off things with the year-to-date 2021 highlights before we get into the actual third quarter highlights, which is the really bad stuff, by the way. Net revenue for the 9 months ending September 30th, 2021 was 1.39 billion, which is an increase of 21.6% year over year. Net income for that same time period was 76.2 million, or 0.76 per diluted share, compared to the net income of 60.2 million in the same period last year, or 0.69 per diluted share. Adjusted net income for that same time period was 110.2 million, or $1.10 per diluted share, compared to the adjusted net income of 91.9 million in the same period last year, or $1.05 per diluted share. And then finally, the adjusted EBITDA for those 9 months ending September 30th, 2021 was 159.6 million, an increase of 13.6 year over year. So taking a look at things from a year over year basis, so how we compared to what we were doing last year, even though I wasn't an investor back then, things do look really good. However, when we actually compare this quarter to last year's third quarter on what we were actually expecting, this is where things get a little bit ugly. And as you can see, let's dive into this right now. This is the third quarter 2021 highlight. So this is the same period as what we're comparing to last year. Net income was 391 million, a decrease of 14.4% year over year. Net income was $1.8 million, or 2 cents per diluted share, compared to the net income of 36.4 million in the same period last year, or 40 cents per diluted share. Adjusted net income was 16.3 million, or 16 cents per diluted share, compared to the adjusted net income of $48.5 million in the same period last year, or 54 cents per diluted share. And then finally, the adjusted EBITDA was 27.6 million, a decrease of 56.6% year over year. So just to wrap up my thoughts on these numbers about what we saw yesterday. Number one, if you take a look at things from a year on year point of view, things do look really good. The company is growing really well. I mean, like 21.6% revenue growth year over year is really good for a growing company. I'm really pleased to see that. However, when we compare the third quarter highlights to what we were comparing to last year, things could have been so much better and we could have really smashed this year. But like the CEO came out and said, we have supply chain issues, which is pretty much a global issue, and it has really affected Corsair in terms of making their chips and all of their different components. And that is why we have seen this massive decrease on the third quarter comparing it to last year. Just taking a look at the statement that was below these earnings, there were a couple of things that I did want to point out which I thought would be quite interesting. First thing is that it says that Corsair remains well positioned to capitalize on the underlying secular growth trends around gaming, esports and streaming, and we intend to continue to make investments to enhance our customer experience. During the third quarter, we were pleased to see the strong pace of innovation continue with the release of our new Facecam 1080p streaming camera and the X Neon gaming monitor. Now, just taking a look at this statement right here, every single company and every single CEO is going to come out and talk good about their business, whether they're doing good or bad. However, with Corsair, I really do believe strongly that this is the case and they are innovating. I have spoken about the Facecam and the monitor in previous videos that I've made, and I just think this is really the case going forward. Now, one thing that was really interesting in this statement is the bit below, and I've spoken about this also in previous videos about how they were reducing reducing their debt size because they did have quite a lot of debt. As you can see from the statement here, it says, we refinanced our long-term debt in the third quarter, substantially reducing the interest rate, doubling the available revolver to 100 million, increased the term and reduced the total outstanding debt by 24 million to 250 million of face value. Now, like I said, I spoke about this before, Corsair did have a high amount of debt because they're buying a lot of components at the end of the day, and to see them actively taking or proactively taking an approach to reduce this debt, I think is really good for the long-term growth of this company. So just seeing that in the initial kind of statement was a really good thing to kind of see from an investment point of view. Now, just taking a look at the stock price and how it's reacted yesterday, one thing that I wasn't expecting, no matter what, unless it was really bad news that they were going to be talking about in their call, was the stock price to go completely down. This was already priced in when the CEO came out around 2 weeks ago and said about do not expect amazing earnings coming up, and I think the stock dropped around like 8 to 10% in one day, and I thought this was already going to be priced in. I thought the only thing that could have potentially happened was we saw a big rise in the stock price, simply because the earnings might not have been as bad as what people were expecting or what they were making them out to be, or maybe they released some news alongside their earnings which could have been really positive. And something really weird happened actually at the start of the open yesterday. I was watching it really closely, and what actually happened was that the stock actually rose like 8% or so at the open of yesterday's trading day, but instantly it come crashing down, as you can see right here. And I thought that was really weird. Now, I don't know what caused that. I'm no kind of expert into looking into those things. Maybe it was a large institution kind of cut their losses with the stock or something like that. But that was a really weird trend to see at the start of the day. I thought, wow, this stock has reacted really well, and literally within minutes or seconds, the stock had just completely crashed, and by 10 a.m. New York time, it was kind of back to where it was for the last week or so. Now, just to say how the stock finished up on the day, it actually finished up about a percentage to the upside, which was actually really positive considering how bad the earnings were. But like I said, all of that bad news was pretty much priced in. So it was a very boring day for the stock apart from that first 30 minutes. But I thought I would bring that up just so you guys are aware on how that reacted if you wasn't already. Just moving on to what they said about the financial outlook. One thing that did stand out to me is that they said they were taking more of a reactive approach to the current global shipping crisis by actually building inventory in their hubs closer to their customers, as it says in this statement here. But the one thing that they did mention was that they are actually finding it difficult to pass the costs on to their customers. Now, from my point of view and my opinion, I think that they shouldn't pass the costs on to the customers. However, I think what they're doing in terms of bringing that inventory, maybe if it's just a temporary solution closer to the customers, I think that can be good just to weather that storm. Like I said, this is a global supply crisis. Every company is seeing the effect of it. Even the biggest company in the world in Apple is seeing a massive effect, with Tim Cook saying that Apple lost out on like $6 billion worth of sales or revenue because of it. So every company is dealing with it. It's going to get better in the future. And I just think that just taking this reactive approach, just maybe for the temporary time being, is probably a good idea. But one thing I definitely don't think that they should do is pass the costs on to their customers, because I think that the pricing model for their products are really good at the moment, and I don't want to see that kind of shoot up anytime soon. Just moving on now to the new updated guidance. So what they're saying that they're going to be expecting to do for the rest of 2021 or for the full year. And I think everything that you can see here has taken roughly a 10% hit on what they were kind of expecting before. As you can see, net revenue to be in the range of 1.825 billion to 1.925 billion. I believe it was just over 2 billion on their initial expectations. Adjusted operating income to be in the range of 180 million to 195 million. Adjusted EBITDA to be in the range of 190 million to 205 million. And like I said, if we were to take a look at all of the previous expectations, I think they were roughly 10% more than what they are expecting now. But like I said, and like I've said throughout this entire video so far, this is all stuff that we were expecting. So what are my thoughts about this stock going forward? Now, as a whole, I am still very bullish on Corsair stock. I'm a long-term investor like any of my other stocks. This is one of my biggest holdings in my portfolio, especially in terms of my individual stocks. I think it's sitting at either number 2 or 3. My thoughts on this stock is simple. Obviously, we're going through a lot of pain at the moment, but the good thing that makes me feel a lot more comfortable is that pretty much every company that supplies chips or components is going through that exact same pain. However, Corsair is going to get hammered a lot more simply because it's a smaller company and it's more of a high growth company. So in terms of the bigger picture, I'm still very, very content with this company. Yes, the Q3 earnings hasn't been good. Yes, I am down on my initial investment into this stock, but like I said, I'm a long-term investor. I do not invest into a stock if I'm going to be planning on taking my money out in 6 months. I'm in this company for at least 3 to 5 years, and I'll review it every year as I go on. So yeah, from an overall point of view, I'm really happy. Just taking a look at some other things, supply chain issues are actually starting to improve. I believe people are trying to work out different ways of actually getting products to customers or getting components to the manufacturers to make those products. I think the demand for the products are still there. I think that gaming in terms of its industry is only growing. All we need is more games to come out, more people to want to get into streaming as well with the Elgato products, more people wanting to get into YouTube. That will always have a massive effect. Like even just taking a look at me, this year I bought this light which you can't see off camera. That's an Elgato key light. I've got another one over there. I'm going to be buying an Elgato Stream Deck literally within the next couple of months. I think that the demand for gaming and streaming is there for the future and is only going to grow. And I just think that 2022 is going to be the year for Corsair. Now, I think over the next maybe quarter or maybe even the first quarter of 2022, we're still going to have these supply chain issues. It's definitely going to go through past Christmas, and I think that's going to reflect in the next earnings call as well. But I really think, or I'm really hoping, that by the end of 2022 we're really going to see, once that kind of supply issues actually kind of free up and all the companies are getting back to where they usually are, we're really going to see a massive benefit in terms of Corsair and Corsair's stock price. So that was the video today. That's my thoughts on Corsair's earnings. That is what my thoughts are on the company going forward. That's what I think is what is next for Corsair. I hope you enjoyed it. If you did, make sure you do leave a like down below. Subscribe to the channel if you haven't already, and I'll catch you guys in the next one. Take care.